So instead of giving them a tax bill for that piece.
I couldn't get anyone in.
I call a meeting to order, regular council meeting of July 18th, 2023 to order at 6:30 p.m. Disclosure of pecuniary interest and general nature thereof. Is there any? None? Okay, 3, public meetings, there are none. 4, and deputation delegation, we have Daniel Gerard from Kemp Elliott and Blair, presentation of the 2022 audit. You want to come up, Danielle?
Hello, everyone.
Hello.
We meet again. We'll just go through the financial statements for 2022. You should have a copy of some of the important pages from your financial statements in your package. Obviously, it is not the entire statements. They are over 25 pages long. So we give you the information here that is more relevant and that we think is important to review. If you want full copies, they're more than welcome to review them. The staff will have copies. So the first page that we go through is page 20, which is actually a note to the financial statements. So it's a budgeting note, and what this is your statement of operations. But as we reviewed in the past, the required presentation is different than how you budget. So the ministry requires you to present your financial statements under a PSAB method, and there are some differences there between PSAB and the way that you budget. So we convert your statement of operations to the way that you budget, so that what we're reviewing tonight, we're comparing apples to apples. So it makes things a little bit more clear to review. Basically, the major differences are capital expenditures. So for PSAB, they are capitalized and amortized. In your budget, we don't do that. We basically have all of our capital expenditures as an expense. Same with long-term debt. So repayment of long-term debt, principal payments are usually not on your statement of operations, but on your statement of financial position. But for budgeting purposes, they are expenses. So this here makes things a little bit easier to review. So this is what we go through with council so that it actually makes a little bit more sense. You can't change the way that you budget because at the end of the day, you still have to strike your tax rate, and you can't do that if you've got amortization and things around. So you got to keep doing it the way that you're doing it. There's just a disconnect right now between accountants and municipalities, and hopefully that will get sorted out sometime in the future. So the first column that we're going to look at is the 2022 actual middle column. Your budget's on the left and 2021 is on the right. And we are looking at operating revenues. So municipal taxation, 633,000. So the rate went up 2.25%. Your assessment went up 0.8%. So that caused an increase in taxation revenue of 2.7%. Water and sewer fees, 516,255. So the trailer park used to be charged a water and sewer fee, but now it's absorbed into their rent amount. So that's why there's a difference there. So the amount of water and sewer has decreased, but we'll see a little bit later that the rental amounts have increased. Policing fees, 359,615. Again, trailer park is the difference there. So they were used to be charged an actual policing fee. Now it's been absorbed as part of the rent. User charges, this is where we see the increase. So we went from 132 to 181, and that's where the trailer park rental went up $38,000. So it's just a shift between specific charges that were being charged to the trailer park, and now it's all absorbed as one rental fee. Provincial grants, 991,000. The largest amount in there is your Ontario Municipal Partnership Fund, and it has stayed the same. You also have OCIF funding and the library. Federal grants, 79,000. So you've got FedNor for an intern. You've got some gas tax that was used on operating expenses. And again, you've got some library federal grants as well. Revenue from other municipalities, 17,661. That's the cemetery, the library, and then the water that's being charged to Coleman. Investment income, 16,058. Interest rates are starting to climb, so you do get a bit of a benefit on that. Penalties and interest on taxes. So you do charge penalties and interest on overdue and unpaid taxes. We'll see in a minute that your taxes receivable have actually gone up, which has caused this account to go up. Provincial Offence Act revenues, you have no control over. So unfortunately, they are anticipating very little to no income in future years. So you got a big $43, which is a fairly large hit for you guys as well. Land sales, you did sell a piece of land for $2,000. So this line here is the confusing one. So gain on sale of government business partnership. So basically what happened is you sold your solar project. You didn't sell it at a profit. You sold it for what you paid for, which was $51, which is your original sugar purchase. So basically what happens is over the years, accounting rules require us to show your portion of the solar losses in your financial statements, even if you've never actually had to pay anything out. So it was still a standalone operation, so it never cost you anything other than the original $51. But those losses that were being accumulated inside the solar project had to be reflected in your financial statements. And that's just how weird accounting rules work. So about half of them, we'll say about 50%, I think you own about 50.1 or something, but 50% of those losses have been accumulating every year. Now that you've sold that operation, we're reversing those accumulated losses. So it's showing up as a revenue. So that revenue line of 364 is basically the reversal of all those accumulated losses. But at the end of the day, you never received money and you never paid money. So the 364 is a bookkeeping entry. So we need to ignore it for this purpose because I think it skews a lot of the numbers. It's a very large number, but it doesn't actually represent cash you've received or cash you've paid out. It's just a reversal of losses that have been in your financial statements every year. Okay, so I want to forewarn that because you didn't get 364,000. All right. The next line, which is income from government business partnerships. So last year, your share of the income was 12,000. You never received 12,000, but the income generated from the solar project, it did generate $12,000 of net income that was your share. So, but you never did receive an actual cash payout or anything like that. So these are just bookkeeping entries that mess up your financial statements as well. Other revenue, 164,000. So in there you have $10,000 of what you actually received for renting the land that the solar project is now on. So where you've never received anything before, this year you actually received $10,000 of rental income, and that is actually cash that did come in. So you've got Fraser Building, the DSAB is paying their share for a portion of those units, and that was up about 40,000. You've got $10,000 towards a fire truck donation, and then funds received from the Schmisming Foundation for various associations in the area went up. So that was the main increase. So total operating revenues, 3.382 million. Capital revenues, we have provincial grants of 249,000. That would be OCIF and NORDS funding, the provincial components. Federal grants, 190,000. You got gas tax. You have Community Foundations of Canada and FedNor. Proceeds from long-term debt, we didn't have any this year. All the debt for the new garage came in last year. So total capital revenues, 440 for total revenues of 3.8 million. Operating expenditures, general government, so everything that has to do with running the municipality itself is at 689,310. The major increase there is you had Steve and you had John for part of the year, so your administrative costs were just higher. Your Fraser DSAB expenses also went up, such as for their units themselves. Protection to persons and property, 551,000. Your COVID expenses went down 32, so those expenses, those additional expenses have dropped. You also didn't get any funding related to COVID expenses. Transportation services, so everything that has to do with roads, 625,000. Your fuel was up and your wage allocation was up. So I think at the end of the day, public works, your cost remains about the same, but the allocation between water, sewer, roads, parks, recreation, all changes depending on what their hours are and where they spend their time. So in this case, the wage allocation was up about 37,000 towards roads. Environmental services, 898,000, and we will look at separate statements for the water and the sewer system in a minute. Health services, 157,830. So the land ambulance portion of the DSAB is in this number, and it went up slightly. Social and family services, 107,057. That's the rest of the DSAB other than land ambulance, and that stayed consistent with prior year. Recreation and cultural services, 166,000. So you did fix the roof at the theater. Your expenses at the library were increased, and the museum costs went down. Planning and development, you had an intern that was funded by FedNor, so the costs for the intern are in the 82,723. So total operating expenses, 3.2 million. Capital expenditures, 694,000. You did some work on Silver Street, the water plant, wetlands, Prospect Street, Silver Lane, Public Works Garage, the Tech Park, a new lawn tractor, and some work on the walking trail. busy capital year. Long-term debt repayment, we now have the new garage loan that needs to be repaid, so that's gone up to $60,395. And this is the principal portion only. The interest is actually up above in the transportation services line. And so your total expenditures are just over 4 million. So if we do your total revenues less your total expenditures, we do have a deficit of 211,000. Now, if we ignore the 364, which was the reversal of the losses of the solar project, that's actually a deficit of 575,000. And that's how you finish 2022. Are there questions on that? Everybody's good with that? So you were anticipating a deficit of 192, but actually ended up being 575.
Not really yet. Still looking and thinking and looking at the numbers.
Okay, so
I can't change the numbers.
no, I can't. So the next page, which is page 4, is your statement of financial position. So this one is the actual required PSAP one that gets submitted to the ministry. We don't convert it here or anything. It does say where you were at a point in time. So on December 31st, you had 703,000 of cash. That dropped from $1.4 million. Well, you did have a deficit of over $500,000, so that's where that went. So when you have a deficit, your cash depletes, obviously. Taxes receivable, 394,000, so it's gone up from the year before. We do have a great collection policy, so it's just a matter of waiting the time to register the properties, but you are very good at doing that. So eventually we hope to collect. Sometimes some don't work out the way we want, but that process does work fairly well for you. Accounts receivable, 237,000. So who owed you money on December 31st? 73,000 of that is your HST rebate. So the application is done after the end of the year, so it just hadn't been received yet. 41,000 was from FedNor for the intern and Tech Park. There was an insurance claim for lightning of 105,000 as well, which just hadn't been received yet. So total financial assets, $1.3 million. Under liabilities, we have accounts payable and accrued liabilities of 454,000, so about the same as last year. That number will swing year to year depending on the timing of a check run or the timing of when invoices are received. So for example, policing always runs 2 months behind. So you get November and December and January and February. So there's always 2 months of policing in your accounts payable, and then anything else that gets paid in the following month that relates to 2022. Deferred revenue other, so 147,000, so that's cash received in your bank account, but you have not yet spent on an appropriate project, so it has a stipulation attached to it. And in there is 60,000 related to OCIF, 81,000 to NORDS, and 5,300 Community Foundations Canada. So that's funding that will be part of your budget in the year that you spend it. So if you spend it in 2023, it will be a revenue in 2023 to match the corresponding expenditure. Deferred revenue obligatory reserve funds is a fancy word for gas tax. So again, you've received the funds in your bank account, but you have not spent it on an appropriate project yet. So it's available to carry forward for a future year. And that was 107,326. Municipal debt, so you owed various people 981,000. We have a wheel loader, we have a Ford F-150, and then you have the new garage loan in there as well. Deficiency in government business partnerships. So this is where those accumulated losses used to sit. So that 364 is what got reversed into income this year. So this year it's 0, but last year's 364 is what actually turns onto your statement of operations. So we remove it here from a liability and it becomes an income to you. So total liabilities, just under $1.7 million. So if you take your financial assets less your liabilities, you do end up with a net debt position of 354,000. So we went from 203 to 354. So it is worse off by about 151,000. So that's the important number we want to look at. So if you collected all your receivables, paid off all your liabilities, you'd be in the hole 354,000. So that's what you're starting 2023 with. The other numbers on this page, large tangible capital asset number of almost 16 million. It's the historical cost less the accumulated amortization of all of the assets in the municipality itself, buildings, roads, sewer, water, everything like that. Not a very useful number to you. We don't like to see them on this financial statement because they're a bit misleading. At the end of the day, you can't pay your policing bill with a road. They don't accept it. And you're not looking at selling your roads. You're not looking at selling your buildings. They are to provide a service, not necessarily to turn into cash. So that's why they're considered non-financial assets. And of course, they're on historical costs, which is not a very useful number to you. So your asset management plan should actually have replacement value. So what it'll cost to replace things, when they need to be replaced, and how you plan on paying people. So that's a much more useful document than trying to figure out this 16 million in here. Okay, so the number we want to focus off is on that net debt number of 354,000 because we're about to look at it again. Does anybody have any questions on any of that? Okay, so next page is page 13. It's a note to your financial statements. We're looking at note 10, which is your accumulated surplus note. So that net debt number, you'll look about 3/4 down of the note. You'll see that same 354, 244 we were just looking at. So everybody see that? So above it, we have unfinanced municipal debt. So we're saying of that negative 354, 981 of that relates to long-term debt. Now you decided that that long-term debt will be paid over a period of time in future budgets, not all due tomorrow. So when we're looking at reserves and surpluses and what your position is, we like to take the long-term debt out of that. If you had to pay it all back tomorrow, then yeah, it makes sense to leave it in there, but you're not. You're going to incorporate principal and interest payments in your future budgets and do that over a period of year when the debt needs to be repaid. So by backing out the 981, it gives you the number right above the 981, which is the 627,231. So that's your financial position, ignoring long-term debt. So if you weren't having to pay back all your long-term debt tomorrow, you're sitting on 627,000 of surplus, if you want to call it that. That is what gets allocated to reserves, deficits, that kind of stuff. So that's 627 right now. You have a working capital reserve of 181,000. You have a fire reserve, which was a donation you received for the fire truck of 10,000. We no longer have a recreation reserve. It's been used up. We have a library reserve of 18,000, and we are going to look at the library after. We had a safe restart funding reserve, which related to COVID funding, which was all used up in 2022, so that's gone now. We now have a general municipal deficit of 310,000, so that's all been washed out. Excuse me. The government business partnership deficit has been removed because again, the solar project has been sold, so we've reversed that 364. The library surplus is sitting at 44,430, and again, we will look at that in a minute. We do have library statements to review. Cemetery has a surplus of 50,979. The majority of your 627,000 of surpluses to date or in financial asset position to date relates to the sewer system, which is sitting at 486,000, and then the waterworks system is sitting at 146. So we will look at the individual statements for those systems in a minute, but they basically are holding your financial position. So without the water and the sewer surpluses, you don't really have any reserves. You would have a deficit. So whatever reserves you do have belong to the water and the sewer system. And that's what that means. So remember that a reserve is not cash in the bank. It's an allocation of your net asset or net debt position. So it's an accumulation of all of your accounts receivable and your taxes receivable, less all your liabilities. So it's a net number. So it does not mean that you have cash in the bank that represents that number. There's no other secret bank account in this. Any questions on that? Okay, so next page is page 21. So it's your waterworks schedule. So revenues and expenses related to the water system. So sale of water, 358,000. The difference there again is the trailer park, just because of the change in how they were being built. We have sale of water to Coleman. There's a new water agreement, so they're using a little bit less water, so their charges are just under 14,000. Interest charges on collection is an estimate of about 12,000. Provincial grants, so you used OCIF funding for the water treatment upgrades. I think it's related to the SCADA system, if that rings a bell. For 23,713, for total revenues of 408. We have salaries and benefits, 86,000. So the allocation of public works has gone down because we saw the allocation of roads going up. So if one goes up, the others go down. So it just means public works spent less time on water and more time on roads this year. Material supplies and utilities, 181. So you now are having to pay for chemicals, which I believe is an addition in your Aqua contract. And that was about $75,000 over and above what you were paying. Contracted services, 256,000. Again, your contract with Aqua went up about 104,000. Capital expenditures, 23,000, which is the water treatment upgrades related to the SCADA system. So total expenditure is 548,000. So you do have a deficit here of 140. So you basically wiped out half of whatever accumulated surplus related to the water that you had accumulated. So that accumulated surplus drops to 146 from 286. So it would appear to me that your water system is expensive. So if you look at your operating costs and your operating revenues, they're not breaking even at this point. Any questions on that? You're a quiet bunch tonight. I'm not sure if that's a good thing or a bad thing. Page 22 is your sewer system. So again, same kind of thing. Sewer user fees are 158,000. The difference in there again is the trailer park. Your provincial grants operating, you've got some OCIF related to the assimilative capacity study. Did I say that right? 67,000. So provincial grants, which is the renewal and rehab of the sewer system, and that related to OCIF for 123,000. We had salaries and benefits, 67,000. Again, this is an allocation of public works time. Material supplies and utilities were at 5,600. We have contracted services of 120. Aqua went up about 30,000, and then you've got 69,000 of costs related to the assimilative study. Capital expenditures related to the renewal and rehab was 125,000. So total expenditure is 319. You did have a surplus here of 29,000, and it has an accumulated surplus at 456. Plus this year's surplus, you end up at 486. So this system seems to be okay, but I also don't know based on your asset management plan if you have any major capital projects. Just review that when you're figuring out rates. Okay, next page I have is the library. Steve, do you have the library on there somewhere? There we go. So we are looking at page 5 of the library. So basically, we're just reviewing with the town. This is your statement of statement of operations. So it tells you the operations of the library for the year. So because the library is under the control or the umbrella of council, these financial statements are actually incorporated into your financial statements. They are required to do so. So we have grants, provincial grants of 6,242, which is the main operating grant received by the province. We had federal grants of $15,019. That's the Canada Summer Jobs Program. We got several students last year. Grants other is funds received through the Timiskaming Foundation of $49,325. Federal gas tax, there was nothing used this year, but there was some used last year. Municipal contributions, so the town of Cobalt contributed $33,709. $30,000 is the main operating grant, but you do pay expenses on behalf of the library, such as insurance and any repairs and maintenance to the building. So they get added here. Fees, municipal contribution, Township of Coleman, they give you $2,000. Fees, donations, and rendering activities were just under $2,500. So total revenue is 108. We have wages and benefits under expenditures for 67,386. Amortization, so they do have amortization in these financial statements. I'll explain a little bit after, but that's a bookkeeping entry of the building and any equipment that they would have purchased. So not an actual cash out expense. Books, 3,242. Some utilities at 7,753. Other supplies was some computer equipment purchased for a total of 9,906. Insurance, 2,250. Interest and penalties, 656. Maintenance and repairs, 3,112, and then miscellaneous of $51. So total expenditures were 105. So they had an annual surplus of 3,551. Because the amortization is in these financial statements and we didn't convert it like we did with yours, we would back the amortization out. So in ignoring the amortization, they had a surplus of 14,390. I would ignore that accumulated surplus number below that. We'll look at what the actual financial position is in a minute. So the 14,390 is what their annual surplus was for the year. Any questions on that? So the next page is your statement of financial position for the library. It says where you are at a point in time. So on December 31st, there was $61,085 of cash in the bank. They had accounts receivable of $4,659, which was all HST rebate, but they hadn't, it wasn't rebate, sorry, it's an HST. Yeah, I guess it would be considered a rebate. They're a not-for-profit organization, so their rebate works a bit different, but they do receive a portion of the HST back for the HST they pay in their expenses. So they had a few years of catching up to do, so that's why the amount is large. Accounts payable and accrued liabilities was 3239, and again, these were just normal expenditures that were paid in January that just hadn't been paid yet by December 31st. So their net financial asset position is 62,505. So that's the number that's important to look at. The difference between the 62,505 and last year's 48,000 is the 14,000 annual surplus we were just looking at. So that's how that number changes from one year to the next. So the 62,505 is basically what they're starting off 2023 with. We'll look at that in a minute. The tangible capital assets is basically building, computer equipment and things like that that are capital in nature. Again, historical cost, less depreciation, not a very relevant number. So I would concentrate on the 62,505. Questions on that? So the next page, which should be page 7. Is that a question?
You hear me now?
Yeah, we can hear you. Do you have a question?
Yes. They don't own the building, we do. So is it more their books?
No, it would be the building because at the end of the day, the library is owned by the town. So it's not actually a separate entity. So it's under the control of council. So they're consolidated themselves. So because they use the building, in theory, the library is owned by the town. So the building itself relates to the library. They're not actually a separate legal entity.
But they are a separate corporation.
No, they're not.
That's interesting because earlier this year we talked about how they are a separate corporation and we couldn't have a meeting discussing another corporation.
Yeah, on the legalities of things, I'm not sure, sorry.
200 meters, turn left onto Davenport.
That's it then.
So on page 7, under note 4, accumulated surplus. So if you look at the net financial asset number of 62,505, it's basically separated between a general surplus and a donation reserve. How that's separated doesn't really make a difference. So they're just doing it for administrative purposes. I actually think they just don't even really understand because it's been the same 18,000 for as long as I've been here, I think. So whether you call it a reserve, you call it a surplus, it's all treated the exact same way. It's just an allocation of your net financial asset position. So a lot of times reserves are created for kind of a to-do list or for things to keep separate for the future, that kind of stuff. I can't tell you that the 18 relates to anything specific or a specific donation or anything like that. Nobody's transferred to or from that reserve for as long as I've been here. So I think it's been the same 18,000 for that long. So it's just the way it was accounted for in previous times, and there's never been a resolution. Whether you had a donation reserve or a surplus, it's all treated the same way. The important thing is that their net financial asset position is the 62,505. Any questions on that? So I just have my management letter left. You didn't have it on there, but you guys have it in your package, I think? Yeah, okay. So we've now completed the 2022 audit and consolidated financial statements for the town of Cobalt. The financial statements show an operational deficit of 211,000. This deficit does include the gain on sale of the solar project, which is simply a bookkeeping entry, so no funds were received, which is an additional income of 364,000. Without this gain, the deficit was 575,000. Your net debt position has also worsened to 354,000. Overall, your financial position is continuing to deteriorate quickly. Your operating revenues are not covering your operating costs. You have two main options. One, increase taxes and water and sewer rates to cover the additional operating costs, or two, decrease costs. Both are difficult but necessary to maintain mandatory services. You are quickly running out of reserves, and continuing to use these to balance your budget in the future is not a long-term solution to sustainability. So you have a lot of work ahead of yourself.
We feel aware.
Any questions or concerns?
Any idea on how the 12% tax increase will affect this number? Like, could you project it?
Budget. The problem right now is you're still using your reserves. So you're still going to have a big deficit. You budgeted for a big deficit, so I anticipate you're going to have another big deficit. So until you can balance a budget without using your reserves, that number is just going to continue to go down and be bigger.
Means be happy you got away with it, just a 12% increase this year.
And I have to say, you're not the only municipality in this position. With the high inflation, increasing costs, most town centers are struggling. So I can't say that you're the only ones, but you're at a point now where you weren't sitting on a comfortable position to begin with. So a few bad years gets you in worse shape really quickly. And now you're seeing the effects of that, and you're going to have a hard time getting out of that. So, any other questions or concerns?
Like Financial Times.
Okay, so we do have some paperwork to sign. Some of the documents all of council have to sign, some of them just the mayor and the CAO. So I'll leave those for them to sign after the meeting so that we're not here all night. The other letters, do you guys want to sign them here and then I can take them back with me, or are you going to get everybody to sign them after I've left? I don't really care either way, but you're just going to have to hunt after people, that's all.
I think it's easier just to sign it while we're all around the
Okay,
table.
so the first document then I'm going to pass around is the representation letter. So by signing, you're approving these financial statements and taking responsibility for them. So I will pass, there's 2 copies of the letter, one for us, one for you. So I will pass those around and you can sign them. Financial statements will get signed by the mayor and the CAO tomorrow. So they're actually signing off on the financial statements on behalf of council.
You don't print it too, just sign.
Yeah, you can just sign them, that's fine. I won't need to know who signed where, so if I can't read it, it's okay. A few questions I do have to ask, I am required. Does anybody have any fraud concerns or concerns about financial propriety or anything related to finances or assets of the municipality itself? Does anybody know of any lawsuits or any claims against the municipality that it would not be covered by insurance that we should be made aware of, or that a note should be disclosed in your financial statements? Anybody know of anything significant that's happened since December 31st that should be noted in your financial statements? And by significance, I mean if a building burnt down or something of fairly, that would drastically change your financial statements at this point.
I don't think so. I hope not.
Okay, so that's it for those. The library, because it's also under control of council, or the umbrella of council, if you want to call it that. I know it has a separate board. You are also required to sign off on the library financial statements on behalf of the board. So I am going to leave those as well with the town's financial statements. So you get to do those when you're board. There is a representation letter as well that needs to be signed for that. We have it set up that council does sign off on the library as well. So I will pass those around as well, and you get to each sign that one. There you go. Let's do it again. It's almost like buying a house. Okay, so that's it for the 2022 meeting. Does anybody have any other questions or concerns? And again, you don't have to chase after anybody who's not here. I only need quorum on the signatures. So as long as there's quorum here, then that's enough for me. I do have a quick meeting for next year's meeting. Is that okay if I do that right now? 55 minutes. So basically, we have to meet with council before doing next year's audit. So we do that now instead of us coming again. So another document that we have here is the engagement letter engaging us to be the auditors for next year. We can either sign it now, or if it's a discussion to be had, I can move the letters and you guys can sign it at the next meeting. It's up to you. Whatever you decide.
I think sign it now.
Okay, so I will pass that around and you get to do it twice again. So this is where we all practice our signatures. 1 copy for me, 1 copy for you.
Changing letters.
There you go.
Don't worry about that.
Does anybody have any questions or concerns or any issues related to the audit or anything they want to question about what we do?
Can't make it wave a magic wand and make it better.
No, I cannot. That's in your hands. We only report what you do. What's that, sorry?
Like a donation.
A donation, eh? If everybody wanted that, I'd be out of business. So we use a materiality factor when we do our audits because we obviously can't check every dollar. It just wouldn't be worth your money or our time. And it wouldn't be very efficient considering the amount of transactions that go through in a year. So we use a materiality factor. So we've calculated that for Cobalt, that materiality factor is actually $42,000. So we think if there was an accumulation of misstatements in your financial statements up to the $42,000, it would not change a user's decision making. Your numbers are big enough, and if there was a $42,000 swing somewhere, that wouldn't impact your decision making process. Now, what we mean by things that we wouldn't have fixed, like errors or that kind of stuff. A lot of times what we see is, say, an accounts payable invoice will come in. Well, the financial statements are all done, we're ready to present, and all of a sudden Dale got an invoice of $3,000 that related to last year. Well, it's under the 42, it's not worth our time to go and fix that now. So a lot of times we won't if it's not a significant number that we don't think will impact you. So in the audit, we've determined that significance to be 42,000. Does anybody have any areas which they believe are higher risk where we should spend more at a time? And again, these are just required questions that we have to ask. Does anybody have any knowledge of fraud or any concerns about possible fraud? Internal control discussion, you do not have an accounting department with 12 different staff to properly segregate duties and have controls in place to prevent errors and irregularities. So the onus becomes on council to review. So if you are the second signature on checks, please review the documents that you are attached to the checks to make sure the checks are made out to the right supplier, the amounts are correct, and that the expenditure makes sense for the municipality itself. If you are reviewing reports, ask questions. Make sure you always know what's going on. That's it for me. Any other questions or concerns?
I do. I don't, I guess you can't clarify the whole library situation, but I definitely have concerns that we're signing off and that we've basically been told that council has no business having anything to do with the library and that we shouldn't like be asking questions, and we have basically no rights, and yet apparently we have the entire financial responsibility. So I don't know who, if that's Steve to clarify, but I'm feeling actually that what you're saying and telling us about the library is not what we have been told about the library.
Yeah, and I think that's more maybe of a legal aspect side of things. Like I know from an accounting standpoint, the library falls under the municipality itself. From a legal standpoint, I do know that they are controlled by a separate board, but from my understanding is they're still under the umbrella of the town. Whether that's correct or not correct, I would say it might be more of a legal opinion at that point that you would require. I'm not a lawyer, so I can't really go into that. But if you've got some questions there, I would say, yeah, follow up with the staff and they can get some more information for you.
Yeah, if you call into the office and talk to the staff, Angela, they can explain it a little better and so that you understand it.
Yeah, I just think also, I get this is maybe for a future conversation, is that we should reflect about the library entirely, like the massive cost, and it's only costing Coleman 2,000. That maybe we could approach Temiskaming Shores and see what it would cost to just, piggyback on the Temiskaming Shores library and save all the costs associated with the library. Maybe they would take $2,000.
Well, that'll be a discussion for another time, because then that also means we don't have a library in Cobalt and our residents would have to go to Temiskaming Shores.
Maybe not. Maybe they would do a branch.
Okay. Again, I think that's a discussion for another meeting.
Yep. Well, you were the one who continued to say why we couldn't do it, so you continued this discussion.
Okay, and we'll carry on.
Okay, any other questions or concerns for me? Okay, so I'm going to leave this.
Thank you very much, Danielle, for your services and your explanations.
Sign for it now, I guess. Yeah, we're on the hook now.
We're on the hook before.
A draft motion, be it resolved that council receive the 2022 financial statements for the corporation of the town of Cobalt and the Cobalt Public Library as presented by Kemp Elliott Blair LLP, Chartered Professional Accountants. I need a mover and a seconder. Moved by Councillor Starchuk, seconded by Councillor Hughes. All in favor?
Good night.
Good night. Carried. Adoption of meeting agenda, draft motion, be it resolved that council approve the agenda of the regular meeting dated July 18th, 2023 as presented. I need a mover and a seconder. Councillor Anderson, Councillor Starchuk. Discussion. I have a resolution to waive procedure. Okay. And, sorry, need a mover and a seconder.
No,
I did. I
Yeah.
didn't mark it off, sorry.
start trucking.
All in favor? Okay. And then I have the motion. Be it resolved that council suspend the procedural bylaw to allow a motion to be introduced under section 7 to add item 7.2, the appointment of a member to the Sharp Lake Property Ad Hoc Committee. I need a mover and a seconder. Councillor Hughes, Councillor Wilcox, all in favor? Carrie? Approval of previous council minutes. Draft motion. Be it resolved that council approve the following minutes as presented. Regular meeting July 20th, special meeting July 11th, 2023, committee of the whole meeting July 12th, 2023. I need a mover and a seconder.
Just a quick correction,
Or, sorry,
June 20th.
I need a
June 20th, not July.
June 20th, 2023, special meeting July 11th, 2023, and committee of the whole meeting July 12th, 2023. Need a mover and a seconder. Councillor Hughes, Councillor Anderson, any discussion on those minutes? Okay, all in favor? Carrie? Items for council consideration. 7.1 geothermal energy study, discussion on slide presentation and council direction. Okay. We need to make sure we give staff clear direction. We were a little confused last time.
Yeah. So I hope everyone's had a chance to read this through. This is about the same presentation as we got pre-COVID, when we were going to try and, do this project. Where we're at right now with it is that there's two, I believe he puts in here two sections to it. The first section, part one, here's my note, is the first phase of it is technical and economic studies for it. So what they're going to be doing is there'll be a group of university students, various levels, doing this research in order to write their theses, a variety of different theses with it. And so this first section is all fully funded. The university has the funding all in place, for this part of the research to come drill down, measure the flow, measure the amount of water there, the water temperatures, do the geochemical, all the different aspects that they're going to have to do in order to decide if our water down there in the mines is suitable for using for geothermal heating and cooling. So that's the first stage. That's 2 years that they'll be working on that. And all they're asking of us when they're here is just some office space, for the kids to work in while they're here. So we have, the business room there. We've got space where when they're in town, they can use it. So they will be here on August 8th, to Tuesday. All the principals will be coming. The ones from the university, Agnico, Story Environmental will be there with us because they have geochemical results from other studies they did above and below our water area, specifically farther down in Milk Creek years ago anyway. So they have study results that they can add into it, but they're all going to be here and just meet and take a look over the area and get a realistic look at Cobalt. Because Mustafa, we keep saying, he says city, we're going town. So the first part of it, they need permission since they're going to be on our land in town doing that. They need permission from the council. They have permission from Agnico, to go underground there and find the stuff. So they've already got the permissions there. And then year 3 is where they'd really like to have our name on it, but that's the big money year. That's when, if everything comes out for a positive, that yes, we can use, geothermal can be used efficiently and as a money saver for us. That's the big money year in developing it. And I already told them in that first meeting, it's 50-cent dollars they're going to be able to tag from the federal government, and that's an open-ended funding, so they can apply for it anytime. And I said, but Cobalt will not be able to put one cent into that. We could put our names on it because it needs to come, the funding needs to come from, applied for, but from a council. But I said, there will be no dollars that can come from Cobalt because we absolutely cannot afford it. But if they can get funding from other places too and develop it, then at least we've got the developments here. And it may lead to actually getting our conversion along this street to geothermal.
Okay.
But that's for consideration 2 years down the line. If it doesn't work out, we can't do it. Well, we can't do it. But at least the students have gotten their theses done and going on to other projects and everything. So, monetarily for the first 2 years, it's a benefit having extra students in town using your businesses, that kind of thing. A benefit for scientifically and technically that Cobalt's out there, being a positive influence in this.
So I just want to make sure that we understand it fully. So if we agree to the first phase, we're not tied into the second phase.
Yeah, and that's what we have to firmly establish with them too. I think when they do come on the 8th, if everyone's available and they get here on the 8th, whenever they plan to all come here, at least you and I and Steve and Dale should sit down with them.
Well, I think actually they should be coming to council. So all of council can ask some questions directly if they need to.
Yeah.
Because it's all council.
One of the two, yeah.
Because saying that we give them office space, there's additional utilities, which aren't huge, but they are costs that we're gonna have to keep in mind. Are they gonna bring their own IT support? Because I assume they're gonna need computers, and if they have any issues connecting. So these are all considerations that we have to take into account as well. The question is maybe we should be asking them directly.
Your worship, we have a committee of the whole meeting on August 1st. There is a meeting on the 8th.
Okay, can we maybe get them to come to?
Push our meeting back.
Then we have two close together again.
Do it as a special meeting.
Yeah, a special
Late
meeting.
afternoon,
Yeah,
council meeting.
like they were going through lists of dates for, who's available to come, who's on holidays, that kind of thing, to come up with the 8th at that point.
Okay, well, we can call a special meeting if you want to firm up the date with them.
Okay.
Reach out to council later date just to, once it's confirmed, and what time.
Yeah.
If it wants to be in the afternoon or whenever they're in the area.
Okay.
Yeah.
You can get back to staff with that. Does anybody else have any? And I also just want to make sure that you said if they can get funding from other sources, as long as they understand that we don't want to sign on any funding proposals either, because if something falls through, then we're bound because we've signed as the town. So there's something else maybe to clarify with them.
Mm-hmm. And that can be clarified at that time.
Does anybody else have any questions? Okay, so I guess staff direction would be, we're gonna set a special meeting. Once Councillor Anderson confirms a date.
Yeah.
Okay. Move on. 7.2, Sharp Lake resolution. Whereas at the regular meeting of June 20th, 23, council formed ad hoc committee to review options available for the municipality-owned Sharp Lake property. And whereas councillors Cooper, Hunter, Hughes were appointed by council and requested staff to advertise for applicants to fill the public position. And whereas council received one applicant by the deadline of June 30th, 2023. Be it resolved that council appoint George Othmer as a member of the Sharp Lake Property Ad Hoc Committee. Did I miss something? I need a mover and a seconder. Councillor Hughes, Councillor Starchuk. Any discussion? All in favor? Any carried? Draft motion, be it resolved that council accept the items for council consideration. I need a mover and a seconder. There were no items, right? Do we vote if there's no items? Oh, okay. All right. So a mover and a seconder. Councillor Starchuk, Councillor Hughes. Any further discussion on either of those two items? No? Okay, all in favor? Carried? Kind of mixed that up a little. 8, bylaws and agreements. 8.1, bylaw number 2023-19, amendment number 1 to bylaw 2020-32, municipal property tax policy. Draft motion, whereas council received staff report number 2023-06-23 at the committee of the whole meeting, July 12th, 2023, recommending an amendment to the tax installment due dates. And whereas council agreed to amend the due dates to the last business day of the months, February, April, August, and October, beginning 2024. Therefore, be it resolved that bylaw number 2023-19, being an amendment to the municipal tax policy bylaw 2020-32, be taken as read a first, second, and third time this 18th day of July 2023. And I need a mover and a seconder. Councillor Wilcox, Councillor Anderson, any discussion? Okay, all in favor? Carried. Eight 8.2, bylaw number 2023-20, amendment. Did I miss one? Okay, my agenda's all messed up. See. 8.2, bylaw number 2023-20, amendment number 3 to bylaw number 2021-32, traffic and parking. Draft motion, whereas council received staff report number 2023-0628 at the committee of the whole meeting, July 12, 2023, with recommendations for amendments to the traffic and parking bylaw. Therefore, be it resolved that bylaw number 2023-20 being an amendment to the traffic and parking bylaw number 2021-32 be read a first, second, and this second time, this 18th day of July 20th, 2023. We need a mover and a seconder. Councillor Wilcox, Councillor Starchuk. Any discussion? All in favor? Okay. 8.3, bylaw number 2023-21 to adopt an encroachment policy for the town of Cobalt. Draft motion, whereas council received staff report number 2023-0629 at the committee of the whole meeting, July 12, 2023, with a recommendation to adopt an encroachment policy for the town of Cobalt. Therefore, be it resolved that bylaw number 2023-21 being a bylaw to adopt an encroachment policy for the town of Cobalt, be read a first and second time this 18th day of July 2023. A mover and a seconder. Councillor Anderson. Councillor Wilcox. Any discussion? All in favor? Carried. 9, unfinished business. There is none. 10, new business. 10.1, schedule of accounts. Draft motion, be it resolved that council receives the following schedules as presented. Schedule number 2023-12 in the amount of $273,555.50. Schedule number 2023-13 in the amount of $113,862.56. Need a mover and a seconder. Councillor Anderson, Councillor Starchuk. Any discussion? No? All in favor? Okay.
I am here. It's nice that you checked over your shoulder, though.
11. 10.2, Mayor's report. So I received a thank you card from Landon Noel at St. Pat's for the grade 8 graduation silver medallion that was awarded to him. It's a very nice little thank you card with a personal note. Council can review it after the meeting if they like, or you can pass it around. The artist colony is in town this week at the Golden Age Club. Brian Attio, the instructor artist, has invited me to come down and paint with them, which I will do on Thursday afternoon. And that means that I won't be in the office for mayor's hours this week. But if anybody does want to speak to me, if they just let the office know, I'll make a point of getting back to them. And last but not least, council has been given a copy of Council and Staff Healthy Relationships Basics. I think it's very important that all of council review it. It gives us, refreshes our minds on what our roles and responsibilities are so that we don't overstep those roles and responsibilities. I think it's good that we refresh ourselves now and again. Okay, so if everybody could review that, you should have it on your table. And there will be one in your mailbox, Angela, Councilor Hunter. And that's all I have for my mayor's report. Okay. Closed meeting. Draft motion. Be it resolved that council go into a closed session as per section 239 of the Municipal Act 2001 as amended in order to address a matter pertaining to subsection 2A, security of property of the municipal or local board, and 2B, personal matter about an identifiable individual, including municipal or local board employees. I need a mover and a second. Councillor Wilcox, Councillor Hughes. Any discussion? All in favor? Carried. Okay. And we won't be going live on the video after the closed session, just so that the public is aware that's watching. Okay. And we're gonna do a 10-minute recess to set up for close.
Oh, she's out of the car now.